Sarat, thank you very much for joining us today. Let's talk a little bit about whether or not there is a reason to want to own specific stocks. You are a stock picker. Let's talk about which ones you want to buy.
So, Dom, to your point on consumer discretionary, one of the best performing sectors in the last month. You look at GM, the stock is trading at 8 times earnings. Here's a story that I like. You've got record demand for products, and we can't supply them. You've got a management team that's really focused. They've removed themselves from Europe. They're focused on high margin, electric, and a great balance sheet to boot. So I think here's an opportunity for a stock that's down 15% over the last few weeks in a sector that's rising. So as a stock picker, I like that one.
All right, so we're going to buy this. Let's talk about within consumer discretionary, which stock we want to sell that of.
So take the offset of that, the companies that supply into GM and Aptiv, which is a phenomenal company making electric products that go into all types of vehicles. It is trading at 30 times earnings. And when you look at kind of the input prices they're going to get, their ability to pass those on to OEMs who can't even sell enough product because they don't have it, here's a company that just is overpriced at this point in time. I'm not saying it's a bad company. It's just the price point of where I want to enter is not where I like it today.
All right, so it's an interesting move there. Now, if we take a look, that's the consumer discretionary side. Let's move over to a place that you could say is a bottom fishing kind of pit right now. Let's take a look at that other sector that we are talking about right now. What exactly then would you be buying in terms of the overall pick within, say, healthcare or other sectors out there?
So within healthcare, which has been hurting over the last month, and you've got some discussion in Washington as to what they're going to do in terms of subsidizing, et cetera. But there's a stock in there called Zimmer. Zimmer makes products for your knees, your shoulders, your hips. Given the Delta variant now coming back again, Zimmer is now trading at a pretty reasonable valuation for its growth rate. Again, you're going to have a huge tailwind as more people get to replace parts in their body. High margin business, new products. They're separating some of their other businesses. The stock has gone nowhere. In fact, it's down 20% over the last month. I like this stock. I want to add to it, and I think it's one that you want to hold in your portfolio. All
right, so let's move on to, of course, the balancing act here, the one that you want to sell in healthcare, Sarat.
So that would be Alcon. Again, similar to Aptiv, really great company. But if you look at it, it's trading at 30 times earnings again. Here are some, and the demand for its products is great, but it's single digits. It's, surgery for your eye, vision care, your contact lenses, et cetera. But at these prices where the stock market is trading, these are stocks like Alcon that are much more susceptible to pull back. The margin of safety on a stock like that is much lower than you would have on something else that is growing at a same rate, if not faster, at half the valuation.